Hey guys, so the first week of 2023 is finally in the books here. Alright, so let's take a look at kind of where we're at here. So we're going to go all the way back to August to talk about this one first. So this was August CPI right here, and then we had our sell-off that started. So something I wanted to note and was talking about, and I've been talking about pretty much all year, is that every drop needed a catalyst. And what I mean by that is that if you look at this sell-off that we had from the pretty much middle of August until middle of October, every single peak, so this was an attempt to break out and recover, was met with a big event. This was Jackson Hole, and then this was CPI, and then we had FOMOC, and then just all let in. And then trying to think, I think we had either another FOMOC or another CPI or something in here. I don't remember what this big pop was here, but then I know we had CPI right here, and then we just started pushing back up, and then we had CPI push up. So now the same thing kind of here on the pushes up, we needed a catalyst to pop us. So here was a good CPI that popped us. We had another good CPI right here that should have popped us, but we're kind of in this consolidation. So with CPI being on Thursday, something interesting is that this will be, or could be, the first CPI that we don't have a sell-off into since September. So this was October CPI right here. We had a nice little sell-off leading into the CPI. This was November CPI. We had a nice sell-off into it. And then this was December CPI. We had a nice sell-off into it. Right now we're in a consolidation period. We actually look like we're going to be breaking out here. So the reason I mention this is that we've kind of established some different ranges, and I'll talk about it on the weekly here in a second, but we've been trading this $10 range now for pretty much almost 3 weeks straight. We broke down right after CPI, we landed here, and we've just been here since. Today, though, we did establish this support line, and now we actually are broken out over the consolidation resistance, and we broke through this resistance line right here. So this should, as you can see, provide upside, and basically what I'm targeting is that we're actually going to end up back in this same $10 range, which was pretty much $392 to $402. So it's kind of what I'm eyeing, basically based off the daily. This is also the first time that we have closed over the daily 8 and 20 EMA since the drop, which was back here in December 14th. So that's a pretty bullish move. I was mentioning we kept rejecting this daily 20 EMA here, and that was made me bearish, and I was actually pretty bearish with this breakdown under the daily 8 EMA. I was expecting unemployment data this morning to take us down, and it did miss. And historically this year, if you look at when we have a miss, which is lower than expected unemployment data, it usually does result in a pretty big sell-off. However, markets decided to focus on the wage data instead of focusing on the unemployment data. So we're seeing a push up here now, and that should lead to a breakout up to this area. So let's switch over to the weekly, and we can kind of see stuff a little differently here. I don't know why I have two of those lines. So this is the 2022 resistance, or 2022, now 2023 bear market resistance line. You know, we had a little bit of a steeper one right here that obviously would touch here, but we broke through that with CPI back in December. So something that I'm kind of eyeing here, I don't know why my colors got changed. I had these at different colors, but let me see, sorry, here we go. So we kind of have really about a $33 range that I'm watching. So we have this upper limit here about 409, and then we have the downside limit right here at 376. So something that I've been watching, if you look at the previous price action, and this dates all the way back to May here, of the last 35 weeks of trading, all but I think it was 6 weeks has happened inside of this range right here. So from this 375 to 409 area. And if we were to take a broader look at this, and we were to look here at 427 to really, I would still call it 363, all but 3 weeks right here of the last 38 weeks have happened in this same range. I believe that we are actually seeing our most probable 2023 consolidation range. I think it's very probable we could just flow through this consolidation range pretty much all year. You know, there's a chance we could get a little bit more of a breakout, and there's some chance if we get some bad data like earnings and CPI and FOMOCs and things like that, that we could see a further retrace here. But the biggest thing I'm seeing is that 390.1 is our pivot of this channel. So today on this, and this is a weekly time frame, mind you here, the last 3 weeks have had these really long wicks, which are reversal, which means we should see some upside. And when we had this one right here, I really did expect a big push up, but obviously that did not happen. I expected the same thing after last week's candle. We finally got it at the end of the week. So what I'm expecting here now is that we're going to test 390.1 on Monday. I don't know for sure if we're going to break through it, but if we break through it, then I start looking at 398.8 and maybe even going up here to 408.6. The way I see it, we pretty much have two scenarios for next week. Mind you, next week is CPI. We're either one, going to come through and reject 390.1 on Monday, which is going to bring us all the way back down here and probably have a sell-off into CPI like we have seen normally, which puts us somewhere in this 380 or 370 to 380 range. CPI most likely, I'm expecting, based on the numbers I've seen, to come in strong, which means bullish for the markets. And that's going to bring us up. And then we'll probably start our move up and end up in the 390 to 400 range. However, there's also a chance here that we could break through 390 on Monday, and we could find ourselves maybe going on a nice run up into the 400s before CPI. Apparently, Jay Powell does speak on Tuesday morning, so could be some bearish movement there. But I'm more favor a breakout maybe like Monday and Tuesday, and then a sell-off on Wednesday leading into CPI. I still favor bullishness on CPI. I think the markets are going to try to trick us with the fact that we had this huge opening here on CPI in December, but then we end up going for this massive red day. And I think that's going to be the fake out that they try to sell us, that's going to happen again. So I'm really thinking we actually are going to finally get a breakout, and maybe we're going to test up in this 410 to 420 range sometime in this month. So let's go over to futures here. Same thing. We have these $10 consolidation ranges. This one is a little more obvious about the $20 to $30 range that I was talking about. You can see how close they are, and there really just is this small 39.15 to 39.37 really area that we've been just kind of going through. So looking at this one here, we did hold support. We broke through the resistance. We really actually kind of finished at the consolidation resistance with 39.15 here. So we did not actually break through that. But if you zoom out here, this red line right here is 39.10, and you can see that's been a major pivot area for us of upside and support and downside here and rejection here. So this is a very key movement that we did close over that level, and that should open up some upside going into next week. Taking a look at the futures, this is much cleaner. I'm going to need to clean up my other weekly chart. It was cleaned up from my other pictures or my other posts. I don't know why it looks like that now, but something I'm seeing here. So we have the gray channel. This is that inner consolidation channel that I was talking about. This is the 375 to 408 channel essentially. This one though, if you look at it, is 40.95 to 37.70. And then basically what I'm seeing as our pivot level is that 39.10. So 39.10 being our pivot level. Now that we closed at 39.15, we should expect a test of the soft resistance at 39.70. And a breakthrough of that will really then open up that upside push to the 49.95. However, if we were to fall back under 39.10 or reject here, then we're going to come down here and test this 38.60, and eventually we're going to look to go down here and test 37.70 again. Basically, we kind of just have like our normal trading consolidation area, which is that 37.70 to 40.95, and then we kind of have our upper extreme limits, which is for this one is at 40.95 to 42.80. You can see we've had some price action here, but that was the August peak, and then this was back in April and May where we came down, we rejected and fell finally, and then we have our extreme lows, which really goes all the way down to about 35.90. You can see every time we kind of pop down there, we immediately pop back up. Here we kind of try to go down. This is October CPI in the and boom, we're back up here. Same thing, we're trying to break down, but we held that. So this is kind of the consolidation area I'm eyeing here, and I think this wider 4280 to 3600 really is going to be our normal consolidation area we see for 2023. You can even see too that the JPM collar is down here at 3600 and the upper side is 4030. So this really matches very well with that we could come up here to this 4095, maybe even up into the 4200 area before we would see a downside move here. I have the 7-week and 11-week post collar noted on here because usually historically we make a move going into the week 7 of the collar, we push one direction, and then week 7 to 11 we kind of retrace before we finally, the last two, week 12 and 13 basically, just kind of consolidate or continue the week 11 move. So that means here, because this was the first week of trading, we could be seeing a breakout, and we might see a nice 7-week breakout here that gets us somewhere up this way, and then that leads to the retrace for the final part of the February into March, which just would line up with some earnings and whatnot like that. So kind of just watch that as we go forward. Take a look at Tesla here. We're kind of putting in a nice little consolidation area here. We have a nice 102.7 to 123.2. 123.2 would be a very important resistance to watch. You can see we came down, we established it as support, broke it, and now we reestablished it as resistance back on the 30th. So that's going to be my level I eye if we do continue this breakout. I am pretty bullish on Tesla for next week, actually. One of the reasons for that is you can see we have this really nice falling wedge here. Most importantly though, if you go back here, this 111.4, this is a support area established all the way back here in August of 2020. You can see we've had 2 weeks of attempting to break through these levels and failing to do so. That's a pretty strong support area. Pretty much every time we have broken down, you can see we get a nice pop there to kind of support us. So for me, I'm eyeing a retest of at least 123 next week, and we might even come up somewhere even higher up here in the 130 area if CPI comes in good. And much like today, Tesla gets a kind of like a sympathy rally with that. Looking at the VIX here, we did have a nice breakdown. I was actually eyeing the fact that the 8 was crossing over the 20, and that was the first time we've really seen that since all the way back in October. However, that was apparently a fake crossover, so now we're just going to the downside here. We're obviously through support here, and that really just opens up the downside. And I'm actually eyeing and wondering if we might even see a retest of this key 19.7 support area going into CPI next week. If we get a good CPI, there's a really strong chance that we could even come down into this red area down here. We have not really been down in this area in quite a long time. The last real trading that happened down here was back in January. We had some soft touches down in the 18.7 area, but we have not really broken through 18.7 since April, and even that was a quick bump and go. To really be trading this area has been over a year now. So with no big bearish news or catalyst or anything wild happening in the world, that's kind of where I'm eyeing is this VIX sell-off, and I'm really realistically eyeing on SPY coming up here and at least testing that 410 area again. All right, hope you guys had a good week, and I will see you guys next week. Thank you for tuning into this video. Don't forget to subscribe and like to stay updated with my most recent videos. There is a lifetime Discord link there for you guys. If that one doesn't link, just go ahead and send me a message and I'll get you guys a new one. Some of the benefits of the Discord is there's a live trading, live intraday commentary. I also do an updated pre-market with support and resistance levels every day. You can follow me on YouTube, Twitter, Instagram, TikTok, and Reddit.